Hey traders, I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our show's main sponsors, FX2 Funding. With all the craziness going on in the prop firm space, we're excited to share some of the solutions FX2 Funding has put together for their traders. First, FX2 is rolling out DX Trade, which is a web-based trading platform that provides traders a smooth trading experience. It also looks super cool too.
But that's not all. By signing up with FX2, you get access to C-Trade. C-Trade is a trading terminal where you can create custom indicators or download ones from the community. Get access to all of this and more by signing up for FX2.
For traders looking to get funded, this week only, FX2 is having a 45% off sale. To get everything FX2 has to offer, use promo code A1Trading15. Again, this huge 45% discount is available this week only. So use promo code A1Trading15 at checkout. Links and promo code can be found in the description below. Now, onto the A1 Trading Show.
All right. Hey, guys. Welcome back to another live stream. Hope you're doing well. We're back for another one. Yesterday was a big day. Huge day, actually. I have this weird thing I do. It makes no sense, where I have a bunch of good trades open, but at the same time, there's other ones that I missed, and I still feel FOMO. It makes absolutely no sense. It's totally illogical. But what I'm talking about is the good old NASDAQ. I'm not in the NASDAQ, but I have so many other good trades running. It shouldn't matter. But, you know, it's just a weird thing that we do as humans. It's something that I've noticed about myself over the years that I've been trading. And it's not just something about myself. I think it's human nature to focus on the bad. I think it's something about us. We just want to focus on the negatives. And as traders, you kind of have to learn to just push past the negatives, because, if you're going to be someone who's going to trade successfully, you are 100% going to have some really hard to talk about drawdowns. And if you're not prepared for that, this is not the craft for you. There's somebody that I follow pretty closely. His name is, some of you guys might know him. He's more in the stock world. Financial Education Jeremy on YouTube. I've watched him for years. And, throughout that time, he said something that has really resonated with me. He said, if you are not ready at any given time in stock market investing, which is what he focuses on, for a 60% drawdown, do not touch the financial markets. You should just put your money into, money markets or bonds or something like that. But it's really stuck with me because it's so true. Everybody is a genius in a bull market. Everybody feels like they're just the best ever when things are going pretty clean. And I got to say, things are going pretty clean for me right now. And I'm fully aware. I've been here before. I've been in a good time. I've been in bad times. When it comes to markets, what I'm talking about is up markets, down markets, choppy markets. I feel like at this point in my career, I've been through a lot of years of different sizes and calibers. So today, what am I referring to? Well, I'm feeling a little FOMO about the NASDAQ because I don't have the NASDAQ, but I kind of do. So I need to shut my mouth because I have so many other good trades running. Let me brag for a second. I've got two different gold longs that are going really well. So here's GLD. I had a couple losers this week too. I'll talk about those. GLD going really, really well. I'm up $8,200 in the last 10 days on gold. I can't complain at all there. Really nice. I shorted oil. This is not going so hot. So here's one of my losing trades right now. And very possible that if the market breaks through these highs, I'll get stopped out. I'll take a loss on that one. Here is my current P&L on that trade. I'm down $236 on that. But then I've got so many things to update you guys on. Bitcoin, I got stopped out. So this was a bit of a hedge because I have a lot of risk on assets in my portfolio right now, or a lot of rate sensitive assets. So I actually shorted Bitcoin. And here's the thing about positions that have gone bad. They 100% of the time, they look stupid after they've gone bad, right? But at the time, I liked the setup. And immediately I get the comments, and this just happens. I've done this for so long. It happens every time I take a loser. People say, Nick, why would you short Bitcoin? That made no sense. But you have to understand, the same methodology that got me into this, what looks like a stupid position, also got me into my gold trade. It also got me into one that I haven't talked about yet that I'm really excited about. TLT is making a move, and I'm really happy about this one. TLT is a bond ETF that I have been holding on to in the account for like weeks and weeks, but TLT is finally coming back, and I've actually removed my covered call. So yesterday with CPI, I decided to close out my call position that I sold, and that ended up being a very wise decision. We're now up $860 on this position. So what's cool is, yes, I took a loss on Bitcoin, but this more than accounted for my $500 loss on Bitcoin. We're now up nicely. Now, I guess if you say, well, your Bitcoin and your oil trade collectively, that about breaks even with the TLT. That is true. So, I've had a good week overall. I also have XLK, which you won't see in this account right now, because if I go to XLK, you'll see there is no position. It's because WeBull does this thing. When you have it won't show you options trades within WeBull. So this is actually an options trade that I will show you now. Give me 1 second. So if I go over to my positions, XLK. So I have some really good things. I have some really frustrating things to show you guys. I've just got so many positions on right now, so bear with me as I go through all of them. So XLK is going remarkably well. This is the technology sector. I'm up almost $15,000 on the shares that I own. So my buy of the pullback recently is very handsomely rewarding me. XLK, by the way, think NASDAQ. It's basically a concentrated, technology ETF. So you're talking about Microsoft and NVIDIA. And I bought this ETF because I like to trade ETFs a lot. I do hold some individual stocks, but very few of them. And mostly what I do is I trade ETFs, things like the gold market through GLD, or the S&P 500 through SPY. But so let's go through this really quick. Sorry for the coffee drinking on the mic. I know sometimes it sounds really bad. Sometimes like I'll be doing a video or something, and I swallow weird or something, and then this mic is so good, it's so sensitive that suddenly I'm, exposing myself or something. Okay, so the other one, this is kind of my FOMO right now. Look at this. So I sold calls against my VOO. So S&P 500, I'm up $11,800 on this position. But here's the kicker. Here's the kicker with this. I'm also down $2,700 on the calls that I sold. So I shorted calls against my long position. This is what's called a covered call. And it does cap your upside, and I'm experiencing the pain of that. So even though the S&P 500 has continued to rocket higher, I'm still capped at only a $9,000 gain on this position. That being said, again, this is where I just kind of have to say, look, you made money. Don't let FOMO or hindsight beat you down. I have a really good trade that I did on VOO. I'm making money on this one. There's as long as, the market is going to close me out because this call expires tomorrow. So it's very likely that VOO will remain up at these levels that it's at. If it doesn't, if it full on reverses, that would actually be good for my position, because then the call would lose some value and I could actually perhaps close out of it or something. But let's keep going. I've got so many positions on right now. It's rare for me to have this many trades going. SMH, I sold puts on semiconductors, NVIDIA, AMD, Qualcomm, companies that I really like, though admittedly they are very high risk, very high reward. SMH, I shorted calls, and I'm up like $1,500 on those. So that's awesome. TAN, this is a solar panel specialty. By the way, sorry, I see a lot of people in the chat that I have not said hello to. I'm just going to say hello to everybody at once. What's up, Dan, Charles, James, Savik, Marco, Top Trader Gold, Damon. Good morning, everybody. Good afternoon, wherever you are in the world. Thanks for hanging out with me. We're getting close to news, so let me not miss out on this. This is where I'm positioned. I'm short oil. I'm long bonds through TLT. So these are my overall current positions. Things are going really well. I'm hitting all-time equity highs in my account. And I'm fully aware that this win streak that I've had, I haven't had a losing month in 2024, which is great. Despite the stock market itself having, a pullback in April and having a negative month, I have had 5 consecutive profitable months. And actually, December and November were profitable. So I'm on a 6-month win streak, which is great, but also not normal for me. I know full well I'm going to open up my account one day and I'm going to see, oh, it's finally arrived. The loss streak has come back in. And so I'm aware and I'm prepared for that. So let me keep you updated on the gold positioning. And why do I mention that? The reason I mention that is because I'm aware that you're not going to play it perfectly. And the fact that I'm just making money should be enough, right? So mentally, I'm going through this thing where I'm like, oh, well, I should have just bought the NASDAQ. The NASDAQ's up like 50 million%. But you can play that game endlessly. At the end of the day, I made money trading. That's super hard to do, period. But number 2, I'm going to have a losing streak. I'm going to have a drawdown. So don't get FOMO out there. I'm guilty of FOMOing in the past. Just play it safe. Be patient. There's a period of time, and I got to get focused because we got 1 minute. There's a period of time so far in 2024 where I was significantly, I was like kind of just having very modest gains, and I was watching the stock market rip, and then it gave back a ton of gains in April, and I caught up. So, not my best trading year ever this year in terms of like raw gains, but overall, I've had a really good stretch, and I'm thankful for that. All right, let's take a look. We're going to get claims data here in just a moment. Should be out in just a second. So let me go ahead and do Forex Factory. I know it's not FX Street, but for claims, this is just basic. So let's see what we get here. Again, claims data coming out in 30 seconds or so. We'll see if this moves the market. Just a quick update. We can pull up some data. Nick, stop talking and prepare for the news. You're right. You're so right. So claims has been on a recent tick up. We're about to get the latest data. So let's see what we get. 10 seconds to go. Do we get claims data continuing higher? Let's have a look. Claims data should be coming in any second. All right. Claims data probably in based on the lack of reaction, probably just as expected. Let's see. 222. Yep. Came in just as expected. The Philly Fed Manufacturing Index came in light, and building permits came in very slightly light as well. Yeah, so market's kind of a flat reaction to this. No substantial move in either direction, at least from claims data, but it actually arguably this is maybe the more interesting one right now. Philly Fed Manufacturing Index indicates worsening conditions. So 7.7 forecast came in at 4.5. So that's pretty light. Stock market down slightly here on this. I mean, you can hardly call this any sort of move. The dollar index is trending up off of its lows. But claims data came in kind of non-aggressive, not in anything really. They revised hardly from the previous. So kind of a non-event in terms of market volatility-wise here. Let's take a look really quick at some individual things again. Let's get back on our analysis train here. So I'll take a look at the S&P really quick, just at where we're at. So let's take a look at this daily chart, because it's a swing and a home run for the S&P bulls recently. And I am right and wrong at the same time when it comes to the S&P 500. I showed you guys my position on it. I bought VOO. So actions first, I am long, but I also sold a call, which has capped my upside. And you can see I'm down $2,700 on the calls that I sold. That's where I was wrong. But where I was right was I was bullish overall. Remember that a covered call setup is still a bullish setup. It's just that you're bullish basically with the take profit, like you're capping your upside. Anytime you put a take profit on your trade, you're capping your upside. Anytime you put a stop loss in your trade, you're capping your downside. So let's also see, did this do anything to oil? Because again, that's one trade that's kind of not going super well for me. So oil, I shorted this one. It's gone up against me here. We'll see how that one wants to play out going forward. Gold, testing resistance up around 2,400. Didn't quite make it to 2,400. Hit resistance here. Pretty key level. Again, I've got my stop loss trailed on this one. Yesterday with the big spike lower and then reversal intraday, I really liked the way price reacted to that area. I would be out of the trade if it breaks that area. In fact, let me go ahead and just, while I'm on this chart, I'm just going to add my level of support that I'm talking about here. So again, I really liked the way for gold bulls, beautiful price action here. Like I love this trade. Gold has been it for me this year. You know, last year, gold was horrible for me. I took so many losses. And I think at the end of last year, I think I was like break even on gold for the year, which sucked because gold has been something that I've traded for years. But last year just wasn't the greatest of times for gold for my, strategy. And I just had kind of mixed results. I didn't lose a ton of money on gold, but I definitely didn't make a ton of money. But this year, gold has woken up and it's working really well with my strategy. Sound effects. Oh, you want some sound effects, huh? You want some sound effects? How about a perfect candle?
Perfect candle. That green candle right there.
We can do sound effects. Don't you worry about sound effects. We've got sound effects on lock. Okay? Anybody play Call of Duty Zombies and waste like 6 summers in a row like I did? Me and Frank and I used to play Call of Duty Zombies. Him, his brother, myself, some other friends. We were Call of Duty Zombie players. And I was never even that good. I was so lame that Call of Duty Zombies, when I first came out, it was like scary for me to play. I couldn't play that alone. I got too scared. But I mean, that was when I was like a kid. Nowadays, though, to be honest, I'd probably still be too scared.
You what?
Okay, so you know what scares me more than anything, though? A perfect candle that's going against you.
Perfect candle. That green
right?
candle right there.
That was like Bitcoin yesterday. Bitcoin went straight against me yesterday, and that was the perfect candle for the Bitcoin longs, but silly old Nick was short, so I stopped out of Bitcoin. I'm out of that trade. Took a loss on this one. But again, I really liked the price action to the downside, so I'm not going to speak as if, I did something wrong here. I didn't break any of my rules. I had a small position. I shorted. Price action looked good to the downside at the time. And then sure enough, conditions changed. Now you might say, well, Nick, how could you have not seen this perfect candle coming in?
That green candle right there.
How'd you not see that coming? Well, because this candle, as much as people in the Bitcoin world would love to just say that Bitcoin is this, standalone perfect asset, this candle is just CPI data. CPI data absolutely dictated what happened with Bitcoin. So that's where sometimes you get people who are so idealistic about cryptocurrency. Listen, cryptocurrency as a whole is just a risk asset. What that means is that it is subject to the spending abilities of the consumer. In 2022, the consumer was getting, really beat up because suddenly all of their stimulus money had dried up. They had to go back to work. Inflation was starting to ramp up, and it still has for years to come after. The reason CPI popped Bitcoin to the upside, and why also, by the way, full context, I mentioned this several times, this was a hedge to my exposure to interest rate sensitive stuff. I shorted one of the most sensitive, which is Bitcoin. So again, I find it, it's kind of not super informed to think that Bitcoin acts on its own and that it's like this unregulated off the grid system when it perfectly moves as you would expect a risk asset to move. It typically moves with the NASDAQ. It typically moves with, high risk names. Make sense? We need perfect candle shirts. We so do. Perfect candle shirts.
Candle, that green candle right there.
I need to get some more sounds.
Pretty much in line with our expectations.
What else do we have? Hold on. We got cash. Cash is easy. That's a classic.
Instant pain.
Instant pain. That's kind of a good one.
It just does not compute in my brain.
Tom, Simply Forex. That's awesome. Buzzer. I heard this sound a lot in 2021, 2020. Playing Fortnite. Anyways, sorry about that, guys. I'm getting distracted by my soundboard. Someone needs to take this off my desk. So the question is now with the NASDAQ, are we bullish? And that's my question too. So I'm going to go to the Edge Finder and see. How come Tom is not on the show anymore? Tom is a busy guy. He's moved on. I miss him, but he hasn't been able to come on the show as much anymore. So he's mentioned that he would like to come back on at some points, and we do hope to see him back, but I've not seen him in a minute. Okay, let's keep going here. So why did I short oil? Well, oil popped up here as a bearish setup on the Edge Finder, has a -8 score. And if you're an Edge Finder user, all that means is that, when looking at all of the different sentiment, technical, and economic data points that we consider in our calculation here, we get a lean towards the bearish side. So when we look at like retail positioning, for example, retail traders are very long on on oil. So that gives us a bearish read. Seasonally, it is a positive month, so that works against us. The trend is to the downside. GDP, PMI data, retail sales, inflation, and jobs data are all cooling. This keeps me very bearish on gold by itself. I mean, look what we just listed out. The demand side for oil is under threat right now. Okay, so this is my context that I want to make you guys really think about. If you are an aspiring Edge Finder user, if you are thinking about getting it in the future, this is something I want you to understand before you buy a copy. The Edge Finder, first of all, is not a holy grail system. It's not a fortune teller. I wish it did, but I wish anything did, right? Nothing like that exists in the financial markets unless you have insider trader information, or, I don't know what Nancy Pelosi gets into, but she's got something that we don't, right? She's got like the ultimate Edge Finder, whatever that is. But the Edge Finder is not a holy grail system. It doesn't tell you what the market's going to do. It simply indicates, based on all of these factors, where the lean is. And for me, the calculations have to make sense before I can place trades on them. So we're looking at the economic data, and what you need to understand is if you're somebody who trades oil or considers oil, we did a whole course video on my channel for free showing how the Edge Finder specifically is built to track oil. This is a market that is very, very crucial to the whole financial market. Oil, the whole world runs on energy. The demand or supply of oil is very important. Now, specifically on the Edge Finder, we really pay close attention to the demand side, because when we take a look at GDP figures and PMI numbers and retail sales, even if you're new to that stuff and you're like, I don't fully know what all those things mean, here's what you need to your basic understanding of. These are economic data points that show the strength or weakness of various economies. And when those are strong, a strong economy, a growing and rapidly expanding economy, will have a huge demand for energy or oil. And a declining economy or a globally declining economic outlook is bearish for oil, right? Because again, then suddenly people are needing it less. So I've really switched in the last 2 months. I went from dollar bullish to now dollar bearish. and thinking that, okay, we might actually be seeing the data that suggests that the dollar might be under pressure for a little bit, that with it, I think oil also is under pressure. You know, there's another thing that we could talk about. It's geopolitics, right? Geopolitics have really calmed down in the Middle East. And let's actually hope that that continues just from a human perspective. You know, let's hope that things resolve and we find some negotiations that make progress and all that stuff. Because if it doesn't, then, you know, there's also kind of a built-in hedge here. I'm long gold and short oil at the same time. So if there is a geopolitical flail up, one will offset the other because they'll both probably move up in my account. So my gold trade would do well, and my oil trade would do poorly if geopolitics came into play again. But I can't predict that stuff. What I can do, though, what I can predict, or not predict, but what I can trade based off of is the economic data that we're seeing. So the economic data, again, what you have to understand is if you're an aspiring Edgefinder user, you need to understand the basics of how the Edgefinder scores assets, okay? If that was helpful, do me a quick favor and just hit the thumbs up button on the stream. And if you'd like to try out our software, let's give out some trials here. So we're going to be doing trials here today. If that is something that you would like, click the link being dropped in the chat right now. You can apply for a trial, which will get you 30 days access to the tool. There are some conditions, and when you apply for it, you'll find out some more information. So please take advantage. Just takes a second here to apply for an Edgefinder trial. And someone from our staff will reach out to you shortly after to see if you're the right fit, see if this is something that would work for you. And yeah. Thoughts on the S&P, and are you bullish on gold? So I am bullish on both of them for different reasons. Again, like I said, guys, I just went through all that Edgefinder stuff. Please take a second, take me up on that offer. Try out the tool, see if it's right for you. Also, when you speak with a representative, ask them about the Edgefinder 101 course that we just launched. It's available on our website, totally free. You can read through how the Edgefinder functions. If you're somebody who likes to kind of tinker and play around and learn a product, then you are the right person for the Edgefinder, because the Edgefinder is a tinkerer's dream, because you can spend a lot of time, and trust me, I do it every day. You can spend a lot of time getting lost in here and going through economic data, and I love it. So if you're like me, try out our tool. It's to me, one of the best in the industry. And it's partially, you know why the Edgefinder is so good? It's because I'm a genius. No, I'm just kidding. It's because we've brought together the collective fundamental analysis community. We have people like Dan. We have people like Dan Emerson, who's in the chat right now, fundamental trader who's very knowledgeable on subjects. We've brought together people like Frank, who, you know, him and I have traded together for a number of years and spent countless hours digging through the algorithm there. You know, how we want to, not the market's algorithm, what I'm talking about is the Edgefinder's algorithm of how it scores data points. We spent a lot of time going through it. So highly recommend that you just give it a shot and check out the Edgefinder 101 course on our website by going to a1trading.com. Okay, so let's keep pushing. We're going to take just a 30-second break. And then, guys, we are changing gears. We're going to be taking a look at some technical. I know a lot of people have been waiting for me to pull up charts. Don't worry. This is why we have Miko and Marco coming on for Technical Thursdays in just a moment. Stick around just after this.
Attention A1 Trading Show fans, if you're interested in getting free access to the Edgefinder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, and we are back with Miko and Marco. How's it going, guys? Welcome back to the show.
Hello. Hello.
Hey, so a lot has changed since we last spoke, and I feel like we have a lot of things to go through here. The dollar index is down gold running again. The Nasdaq and S&P 500 just hit fresh highs. I'm just curious what you guys' thoughts are on all these markets. So let's go ahead and just dive in. So I guess we'll go through our normal procedure. Marco, you can go first. What's on your radar today?
Yep, sure. Let me take a look. So for me, we did have this major news right here. So yesterday, unfortunately, it just could not commit with a nice trend up. Instead, kind of fizzled out. So the momentum was clearly getting slower and slower. And now we're seeing some even bearish momentum. I'm being more patient for most of the pairs. So that is for the dollar pairs. For the Japanese pairs, seeing some volatility right here. Now, this is a formation that I do like to see. It is the V reversal, or you can call it a cup and handle, or some people may even see a inverse head and shoulder pattern, something like that. But basically, I'm expecting this to go up. So if I see the signature, if I see a push up, I will look for buy setups on most of the Japanese pairs. Aussie US dollar, again, this news candle just could not commit much. I wanted to see like a really nice move up. And this to me was just not enough momentum, unfortunately. So being a bit more patient, Aussie Japanese yen, same thing as EJ, looking for that V reversal to maybe print. Then we have the pound. The pound is looking the same as EU and AU. Again, right here, not seeing much momentum up or down. These smaller candles are not showing me much conviction in either direction, so I'm being a bit more patient. And NJ is going to be the same as the other Japanese pairs. It's even a bit more flat, so kind of looking range bound. For me, unfortunately, for today, not seeing much. I did take a lot of trades at the beginning of the week, but today looks a bit slow.
Sure. Yeah, no, it probably will slow down for the rest of the week, to be honest, just because we've had the bulk or the majority of what was exciting to the market behind us now. We had two very important inflation figures that, as you mentioned, with those candles that you spotted, caused some pretty big moves. The question is now, I guess, the follow through. And I guess, Miko, the question for you I have, and I want to see if we're on the same page with this or not. I've flipped bearish on the dollar because inflation data, I could give you my whole spiel, but basically cool down in the economy, cool down in inflation, really changed the outlook for me on the dollar index. I'm curious from a price action perspective, where you're at with the DXY today.
So yeah, I have joined you as well. I am bearish as well. Last time we spoke, price was holding some support around these areas here. And since yesterday, since the break of that has definitely put to bed my bullish bias. And I'm looking at more downside. We have come into some areas where we might see some retracement on the DXY because we saw a lot of bullish momentum from here. So we might see a bit of a reaction. But what I can see now from a technical perspective is lower lows and lower highs. So I'm going to be looking to follow that until proven otherwise. If we get massive move higher, break structure, I'll fall my arms from that perspective, but I'm seeing some confident moves down. I like the momentum here as well. So in turn, I'm looking at Euro USD and I'm looking at opportunities to long this one. Should we retrace back to this level here? I'm really interested. As the USD, I like this level here. Pound USD, not so much. Aussie dollar, I like this level here. So yeah, I'm definitely bearish on the dollar and looking for some opportunities for that.
Yeah, it really, that candle yesterday was impressive to the downside. I mean, it really just shows the effectiveness of, I guess, just kind of watching a trend form. We've seen this kind of choppiness up here. Then we saw a big move lower, a bit of a pullback. We chattered our way back down. But again, with the confirmation yesterday of the, soft CPI print, what that tells everybody is oh, so the economy is cooling down, inflation story is cooling down. Maybe the Fed's going to cut rates. And that, of course, is very unattractive for the currency itself. So we saw a big dump in that side. But Miko, where we did not see a big dump in was the opposite. We saw some things really loved this, like silver. And you and I talked about this level. This was like the trade of the year so far. I don't know if you caught up with silver at all, but look at this. It came back down to that support level that we found on the weekly. And I did not catch it. I did not get in on this one. But my goodness, it came down, perfectly touched this zone, and just erupted back to the highs. And I believe, did we touch 30? We have not quite touched 30, but we are very close to touching 30. So while you're talking about dollar weakness, I was just curious what your thoughts on with silver were.
Yeah, silver. Absolutely gutted. I missed the trade as well. I was watching it, but I think I was in the gym at the time.
Yeah.
It was on Friday. I remember because I said I was going to use the full H to enter because it was a big level, and I normally use an hourly chart to enter.
Mhm.
But when I'm looking at bigger levels, I normally do use the full H for a bit more confirmation. And this was a really nice bullish. Okay, it was a Thursday. Nice bullish engulfing candle here, and since then it's just been ripping. I've been looking at opportunities for pullbacks and the retest of this area and the retest of this area, but haven't seen that happen yet. Similar with gold as well. I'm keeping a close eye on golds. Gold and silver, whichever one I can trade, I'm happy with. But yeah, I'm bullish on both of them. I think we can probably still see higher prices coming as well.
Yeah. Speaking of gold, Marco, what are your thoughts on it? I know we've had
Mhm.
pretty good momentum recently, though similar to what you pulled up with the euro. Of course, the euro and gold there's a lot of correlation there. It's not perfect, but it's often enough that's worth mentioning. Big push to the upside, started to phase out. But what are your thoughts on gold as it tests the highs?
Yep, sure. Let me take a look. So for gold, I was definitely seeing some nice momentum right here. This is an option that I want to get in on. So some strong bullish candles. The pullbacks are extremely small, no selling pressure. So that was nice. The most recent price action, not that good. Again, seeing some selling pressure here and here. On the top, seeing price starting to give me a wider pullback, also some selling pressure. So just by judging the momentum, for me, this was good. But this is showing me some warning signs.
Yep.
So my bias is still for this to go up, definitely retest those highs. But again, if I want to see price approach the highs, I would like to see this sort of momentum, right?
Yeah, it definitely
But
has.
definitely moving up.
It's definitely
Definitely.
slowed down a little bit, but yeah, it's
Yep.
still, we're near the highs. We've been here before, guys. I think we talked about this as the S&P 500. I remember asking you months ago, we had a long conversation about all-time highs, and gold is not quite at all-time highs. Silver is 50 miles away from all-time highs because of the back in the day with the big pops, but gold, the S&P 500, the NASDAQ, and perhaps Bitcoin, which I actually shorted last time we talked. I shorted Bitcoin, and I'm leaving it on here for display, but I got absolutely smoked by the bulls. They pumped it yesterday on CPI, which makes sense. I was pointing out that I have some long exposure to, interest rate sensitive stuff like bonds and the NASDAQ or tech stocks. So I kind of had a couple hedges on going into CPI, and this unfortunately was one of them. So I shorted Bitcoin, which if CPI had been hot, Bitcoin would have dropped hard because Bitcoin is a risk asset and high inflation would be, no bueno for Bitcoin. But in this case, I took a loss on this one. I'm curious what your thoughts are on Bitcoin, Miko. We talk about it every week. I don't trade it that often, and maybe I should stay away from it because I took my first trade in a while and got smacked right away on it. But what are your thoughts on Bitcoin right now?
Yeah, it was interesting. We did see a big push higher for Bitcoin, quite an impulsive one as well. So I'm still very much on the idea that we've had a really big move higher. It's purely looking at technicals, really big move higher, and the way that we've been so corrective and the slowness of it. Normally, we see this pattern as an impulse, price having a pullback, correcting itself to impulse again. So I'm still expecting price to come back to the highs there purely from technicals. And I did point out some areas here, 52K, 48K, which we might slowly move to and then push. But who knows? Maybe Bitcoin is already decided it wants to take off. I'm not quite sold yet. It's one big candle. Sometimes that could be a bit deceiving. But if you do start taking out this high, then yeah, maybe Bitcoin is actually going to push back to the highs. But I would still like to see a bit more downside to 52 and 48. I think buys there would make a lot more sense. But in the long term, I'm still favoring back to 74K.
Sure. Yeah, I think it's had a little bit of a good run here, I suppose, on the Bitcoin side. Let me pull it back up. Bitcoin's had this nice little breakout. Now that I'm, looking at it with hindsight in my favor, my short looks pretty silly, but now it looks like it's got some momentum to the upside. We'll see how long it can go. Marco, what are your thoughts? Are we still just range bound till further notice, or is this the start of a nice move?
Yep. Let me check it out. So Bitcoin definitely had a big leg up on this 1 hour, but let's bump it up to the 4 hour. Yeah, definitely starting to kick in some bullish pressure here as well. Now, again, what I want to see is break of that high. I want to see a break of that high. I think if we break it, it's going to be a big rally to the upside again. Until that happens, for me, this is a bit of a no man's land. Sure, you could make a case for, let's say, a descending channel, place your trend lines. But again, anything in here, I just kind of do not want to touch. If we break this low, I would expect the price to go much lower and definitely retest this level of 52.7, maybe even lower than that. If I had to call it right now, I would say, to be honest, I think it's still in no man's land, and I could not call it.
Sure.
Because
There's nothing wrong with that.
I'm not seeing a push up or down. I'm just seeing it being stuck in this range bound market.
Yep.
And again, no fundamentals behind Bitcoin, right? The only fundamental could be that the news about Bitcoin has died down, as you were saying. So that might be a bearish case. And because of that, I would say it's going to go down, right?
Okay, fair enough. Last one, we skipped it, but it was just because I had a trade on Bitcoin, though. We talked about that one first. I do want to get you guys' thoughts just briefly on the indices. I mentioned that we just broke the all-time highs. Miko, S&P, NASDAQ, whatever you'd like to look at. I'm curious your thoughts. I mean, look, at the NASDAQ just looks so beautiful trading up here. And I can't lie, I'm, not fully invested. I do have some long exposure to the tech side of things, but man, the NASDAQ looks great. S&P looks great. High level fundamentals, earnings were really solid. This latest quarter, inflation seems to be coming down, and the markets are looking optimistically to rate cuts. Price action wise, big break above the highs. What are your thoughts here, Miko?
Yeah, I think because everything is looking bullish, we're trading at all-time highs for S&P. I think, US 100 as well. Dow Jones, not quite, or might just pinched it. But yeah, everything is looking bullish from a top-down perspective, and I like it when we're seeing multiple time frames in the same direction. For me, that's normally where my high probability setups, and sometimes they can give some really nice trades that go on and on and on. And from a intra-week, intraday perspective, if I was looking to trade indices, I'll just be looking at pullbacks for these guys and just looking at opportunities to buy. US 30, I like this range here for a retest and upside. S&P, I like this range here as well. They were moving a little bit sideways before the news, but after this breakout, it's left behind some nice levels where we could look for a retest. Maybe not so much with US 100, arguably over there as well. But yeah, I'll be expecting some pullbacks and more upside.
Sure. And Marco, same question to you. Indices are feeling the same way, or what are your thoughts?
Yep. So for the S&P, I really like this bullish momentum. So the legs that are standing out to me on this 1 hour chart is gonna be this leg right here. Whoop. This one is pretty nice as well. And then the final one is, of course, this one. So that's some great price action, some very clean price action, and I would definitely be a buyer in this market. Selling pressure, not seeing much. Here on the top, just a small pause. Here, not seeing, except this major red candle, the other ones look pretty good. If we bump it up to the 4 hour, this looks very, very bullish, very, very nice. So I would expect more upside, definitely. I'm not seeing any signs that this price wants to slow down. Daily, yeah, daily, absolutely good. Broke the high, continued. So yeah, this is looking very bullish, and I would be a buyer in this market. Definitely, I would look for buy setups.
Very good. All right. Well, I guess that's all of our markets to do together today, guys. I just want to say before we end this segment of the show, I just want to ask everybody who is listening to do me and the A1 trading team behind this show a big favor. Make sure to take a second here to go follow our guests, Miko and Marco. They come on every week. They focus on technicals, and I think that they help me rope it in a little bit, because if you leave me to my own being, I will just talk fundamentals in circles to myself and have a conversation. And by the end of it, I'll think I'm actually talking to someone different. That's how long I can talk fundamentals. But these guys, they rope it in. We take a look at some charts. We talk setups. We talk price action. And it's always good to have you on. So Miko, Marco, we've just dropped your links here in the chat for anybody who would like to go subscribe to your channels. And thank you guys very much for coming on the show today.
Appreciate it. Thank you.
See you next week.
All right.
Bye.
See you guys. Have a good one. All right. And again, big stuff there for Miko and Marco. Appreciate them for making it onto the show today. We're going to drop their links here in a second. I think we are. Oh, it's up. If you scroll up in the chat, it is there. Maybe we'll drop it one more time in just a moment. But please do me a favor. Again, help us out. These guys, they come onto the show totally for free. They're just adding value to the community, and we really greatly appreciate what they do for us. So their links will be in the chat. You guys can find them there. Just give us 1 second. I think Chandler was loading back in. So should be good in just a second. Okay, so let's keep pushing just for a second longer here. Let me give you guys some updates. I might be taking a loss here today on BTC. I'm sorry, not on BTC. I already took a loss on that. I might be taking a loss on oil. But I think it's important that I talk through this, because again, I might be taking a loss on oil, a loss on Bitcoin, and still this week I'm having a massive winning week. Sometimes you have to remember small losses are totally fine. This is the beauty of letting winners run, right? So I have a really big winner on gold right now. I think we've probably given back some of the gains. We're still floating $7,700 on this trade. TLT, this is my bond trade. The TLT is a 20-year plus treasury bond ETF. This one's up, $500. But then on oil, I'll give back some of those gains, and such is the way of markets, right? At the end of the day, you're going to give back some, you're going to make some. You're going to have some that are smart trades, some that don't look so good. And at the end of the day, it does not matter if you take losses. It matters if you make money in the end. Short sell AMC / GME. Hedge funds are shorting them huge right now. It's game over for AMC GME. Be careful that you don't employ the same mindset that people who frenzy chase do on the frenzy short side. These things could pop again. And if you are heavily leveraged, you could get smoked. So just be careful. I teased the idea of potentially shorting these. Obviously, in hindsight, had I shorted them, I would have made some money. But even if I did short them, it was going to be a tiny size, and it was just going to be for fun. I don't make my money playing around on meme stocks that people are gambling on. I make my money trading very simple, well, not simple, but a defined list of things that I watch over and over and over. I consistently track the economic data. I make probability-based decisions, but I have no probability in the short run on what happens with GameStop. Now, in the long run, do I think a practical small short sell back down to a share price of mid-teens is a reasonable trade? Actually, yes. But that does not mean that it's going to go straight there. What you have to understand about trading is that you might be right about the overall direction in the longer term. And I think that's a high probability trade that you get back down to 15. But I don't know if it's going to look like the yellow line or if it's going to look like the blue line. Okay? I don't know where it goes in the very short term. I don't know who's going to hit tweet and who's going to send out another picture that's going to pop the stock. I have no idea. That is pure gambling. I have no idea when that's going to happen and whether it's going to cause the market to move. What I think is not gambling on GME, what I think is a very practical and longer term perspective is this is my opinion. Do not do this. Don't do anything I'm telling you. Do your own research always. My opinion is a very tiny short position and wait it out to the low teens. If you do get another pump, I think it's a very high probability trade. But again, doesn't mean you can't get hurt. Doesn't mean that if you do it with leverage, you can get rolled over by another pop. So please understand, if you're short, you might see 300% against you. So if you short, a $1,500 position, you could be down $4,500 very quickly. Okay. So I'm just warning you, do not get overly convicted one way or the other. Nobody knows where this is going in the short term. And if you're playing with it, you're playing with fire. Again, if I mentioned shorting it for absolutely for fun on a tiny position, but this is not where I make my money. So yeah. Anyways, guys, that's going to probably wrap up the show. I just want to say earlier, we talked a lot about the Edge Finder. If you guys want to try it out, I mentioned we're going to be dropping trials. If you would like to try out our software, if you want to look at the stuff that we do focus on, which is not GameStop and AMC and the gamblers who come in who have a fun, short-term excitement out of it. If you want to talk trading, if you want to talk real markets, pick up a copy of the Edge Finder or trial it for 30 days. If you guys want 30 days, we're going to drop the link here in the chat. Try out the Edge Finder, click this link, boom, there you go. 30 days access. Just fill out that application and we'll see if it's a good fit for you. And someone from my staff will reach out to you with some more details. With that said, guys, thank you very much. Have a great rest of your day. Great rest of your day. And we will see you back tomorrow. Bye, guys.
Thanks again for watching today's show. Our goal at A1 Trading is to share free value to you, our audience, through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more, lest ye walk the plank. Join our crew as we head out to go long on gold. See you next time.